All right, let's dive right in. The Indian market really ended last week on a knife's edge, didn't it? After a ton of volatility, the one question every single trader is asking is, are we about to find some stable ground or is things going to get even choppier? Let's break it all down.
This right here, this is the single biggest question for the market this week. Seriously, the answer is probably going to set the tone not just for the next few days, but maybe even for the next few weeks. So what is this magic level that has everyone watching so closely?
You're looking at it, 24,000 for the Nifty 50. Now, this is way more than just a number. It's a massive psychological line in the sand. If the market can stay above this, we might see confidence come flooding back. But if it breaks below, well, that could be the trigger for a whole lot more selling.
So to really get a handle on this, here's our game plan. We're going to start by mapping out the key trading zones. Then we'll get into the 4 big triggers that are putting on the pressure. After that, we'll see who's winning and who's losing in the sector battle, and we'll finish up with a playbook you can actually use.
Okay, first things first. Before we even get into why the market's moving, we need to understand where it could go. Let's map out the floors and ceilings that are probably going to define the trading action this week. Let's start with a really simple but super powerful idea: support. Just think of it like a floor. As a price is falling, it hits a point where a bunch of buyers suddenly think, hey, this looks like a good deal, and they step in. That demand creates a floor, stopping the price from dropping any further. That's a support level.
And on the flip side, you've got resistance. It's the exact opposite. It's like a ceiling. As prices are climbing, they can hit a level where sellers come out in force and say, all right, time to take profits. They overwhelm the buyers, and that puts a lid on the rally. These two concepts, the floor and the ceiling, create the playing field.
So let's put this into practice. Check out this table. These are the numbers to watch. For the Nifty 50, you've got a little bit of a floor, that immediate support, around 24,300. But the big one, the one we're all watching, is that strong support down at 24,000. And if we do rally, the first ceiling to break is at 24,600. These are the battle lines.
So what's the overall mood then? Right now, it's definitely leaning bearish, maybe neutral at best. And because of that, a lot of analysts are suggesting a sell on rise strategy. All that means is they think any little bounce we get is probably a chance to sell, because the general thinking is that prices will likely head back down until we can bust through those resistance ceilings for real. Okay, so we know where the market could go. Now let's talk about why. There are 4 major things creating some serious headwinds for us right now, and all of them are putting pressure on those floors we just talked about. Let's break them down. First, crude oil has shot past $92 a barrel. That's a classic problem for India. It hurts the rupee, makes our imports more expensive. Not good. Second, back home, there's been a 60 rupee hike in LPG prices, which gets people worried about inflation again. Third, the big foreign institutions, the FIIs, they just keep selling. That's usually a sign that global investors are getting nervous and moving their money to safer places. And finally, all eyes are on the India Global Forum. Any comments on policy, especially about money flowing in and out of the country, will be watched like a hawk.
Now, with all these things swirling around, you'd better believe not all parts of the market are feeling the heat in the same way. This is a classic case of money moving around when things get uncertain. So let's jump into the market battlefield and see who's holding up and who's taking a hit.
And wow, look at this contrast. It's fascinating. On one hand, you have the defense sector, which is actually looking pretty strong. Stocks like HAL and BEL are seeing a lot of buying, partly because of all the military tensions around the world. But on the other hand, look at banking. It's getting hammered. The Nifty Bank Index just fell below a really key technical level, its 20-week moving average, and that's often a bad sign for the longer-term trend.
For some other big sectors, the story is a bit, well, mixed. Take oil and gas. The companies that actually pull the oil out of the ground, they might do well with higher prices. But the companies that have to buy that oil to sell you petrol, their profits are going to get squeezed. And then there's IT. It's pretty much just stuck in neutral, kind of treading water while everyone waits to see what happens with interest rates over in the US. Okay, so this is where the rubber meets the road. How do we take all this information, the levels, the triggers, the sectors, and actually turn it into a smart plan? This last section is all about building a playbook to help you navigate all this craziness. Your strategy really depends on how you play the game. If you're a short-term day trader, the message is clear: be careful. Don't go all in with aggressive buys the second the market opens. It's probably smarter to wait, see if the Nifty can find its feet in that 24,200 to 24,300 zone. But if you're a long-term investor, you can kind of tune out some of this global noise.
Look at sectors that are powered by demand right here at home, things like infrastructure and capital goods. They tend to be much more insulated from these global headwinds.
And I have one final, absolutely critical number for you. This is the India VIX, the volatility index. It's sitting near 20, and let me tell you, that is high. People call this the market's fear gauge, and a number like 20 is basically screaming that we should expect big, sharp, unpredictable moves. So what's the takeaway? Having strict stop losses isn't just a good idea right now, it's absolutely essential.
So there you have it. We've mapped the battleground. We've identified the headwinds, and we've seen who's standing strong. The only question left is the one for you. With all this in mind, how are you going to adjust your strategy for the week ahead?